So we are in the final years of the Tax Cut and Jobs Act. And the big things that are being affected there, and I've talked about this before, but the big thing for most people is bonus depreciation. So that's getting stepped down. For the first several years, we had 100%, then it was 80%, then 60%, 40%. So that is being lost. However, Congress right now is talking, they're negotiating a new tax bill. And we talked about that last week about the Trump tax initiatives. And they said they want to extend key provisions of the Tax Cut and Jobs Act, which is, I'm almost willing to guarantee that is going to include the bonus depreciation. So that's expiring, but in a bad way, in that we are getting less bonus depreciation than we used to. And hopefully that will be fixed. Because it's just what it really does is it's trying to put taxpayers on a more accurate cash basis. So in the accounting world, there's two primary ways to look at your books. One is accrual and one is cash. So accrual is you book either the income or the expense when you incur it, regardless of when the money hits your account or leaves your account. Cash basis is the opposite, where you only book things when they actually hit your account. So most people operate in a mostly cash. If you have a day job and you work, let's say you get paid every 2 weeks, then as you're working during this pay period, you are expecting a paycheck at the end, but you don't know for sure that it's coming because when companies get in trouble, sometimes they don't make their payroll, and Friday comes and goes and say, "Hey, where's my money?" You have an expectation on an accrual basis, but the reality is on the cash basis. Does the money hit your account or not? So when it comes to bonus depreciation, then you're spending, let's say you buy a piece of equipment for $10,000. That $10,000 left your account. And so on a cash basis, you want to write that expense fully off. And that would be 100% bonus depreciation. If it's a 5-year property where you have to depreciate it 40% this year and then 20% of the remaining 60% each year after that, then that's just not, it doesn't feel real. And this gets people confused when it comes to accounting profits versus book profits versus cash in your pocket. By trying to align those things as closely as possible, then we get into a situation for small business where it makes the most intuitive sense. So that's one that's expiring. The other things, there's always like random stuff, but the big change, or one of the big changes this year and last year, was the vehicle credits. So that's not an expiring one. That was a revamped credit. That the old one went away, the new one came in, and now we have credits both for new car purchases, but also for used car purchases, which we didn't have before. So that already went away, but came back better. The residential energy credit, that was another thing that went away and came back better. Let's see. Yeah, for most people, the biggest issue coming up is the bonus depreciation issue. Along with the Tax Cut and Jobs Act expiration, there's a whole slew of other things that are set to expire. So qualified business income deductions, the estate tax limits that had been doubled being halved, and a bunch of other stuff. Standard deductions versus exemptions, all these kinds of things. However, with the caveat that all of these things are currently under negotiation in Congress. I don't think you have to worry too much right now until we get an actual tax bill that is passed and put into law, hopefully within the next couple of months. So yeah, that's where I would leave that one. Nothing too crazy right this second. As we get an actual piece of legislation, we'll keep you up to date on that one.
Okay, sounds good. Looks like we have an NFT question.